Good afternoon. This is StockTwits Phil Perlman. I'm here, the CME Group, New York City, the NYMEX floor. I'm joined this afternoon by Mihir Dange, Graphite Capital. How are you today, sir?
I'm great. Thank you for having me again.
Good to have you. Okay, let's get right into it. We'll talk gold. What are the levels that you're looking at here?
The first area is 1375, huge area. 1375, 1351, and 1301.
And on the upside?
And on the upside, we're looking at 1425. A settlement, in my belief, above 1425 gets us $1,500 gold.
And that may be associated with some type of action in the Middle East?
Absolutely. Let's just talk strictly on a technical basis. On a technical basis, we traded 1425 to 1433, could not settle up there, settled below the 1425 level, and I think the news that will get us to settle above there would be going to war with Syria. We have a lot of information coming out over the next 2-3 weeks.
On the economic front.
On the economic front. I mean, just everywhere. First, we have unemployment this Friday. So we'll have the jobs report, then we'll have a vote from Congress coming the following week, then we'll have the Fed and debt ceiling. So in a span of 14 to 20 trading days, we have a lot of information coming out. It's going to drive the markets. The volatility is bid right now. We're moving $25 a day. We normally move 15 to 20. So there's a lot going on.
What's the buzz around whether we get the vote or we don't get the vote?
I mean, it's almost like day-to-day news, news-related events that come out. You see, they spike the market. Yesterday, the Secretary of State said, the Speaker of the House, I apologize, said that he supports Obama's decision. We rallied $10 instantly, and then it just continued to rally from there. Now it seems like, well, we don't know. It may be longer process to get involved into Syria. The vote might not go through. Yesterday on CNBC, 2 Congress people said, we're not voting that way. So now it looks like it may be a longer process in getting involved into Syria. You're seeing us sell off. You're seeing the dollar rally. You're seeing the S&Ps rally.
And so volatility is the word for September?
Oh, I think absolutely. You're seeing just between Sunday and today the ranges in gold and silver of $40, $30, and in silver in excess of $1. And we're seeing 1 to 1.5 times the normal amount of range in the future. So to me, that means there's going to be spikes in volatility. The volume is a little bit lighter, which is going to move the markets more. Absolutely.
So even with all of what's going on around Syria and the potential for war, we're not seeing a big volume coming back in yet?
I think we have the Jewish holidays right now. I think once you see the holidays kind of finish up, you'll see the volume kick back in. Europe is now off vacation, so you'll see the volume kick up. And I think especially on Friday, when we have the unemployment number, you'll see the volume kick in.
And why didn't gold rally more last week? Why didn't we get into the weekend where there was all this speculation? It was still fairly hot off the press. And we didn't see the big jump to maybe 1425 or above then.
I think we saw a little bit of pullback just on technicals. It's a very fair question of why we didn't rally on Friday going into the weekend. I think it's a very prudent question. I don't have a good answer for you. But I think what happened on Sunday night over the weekend is that they were going to vote. There was no immediate decision. We're going into Syria. I think if we had seen that, I think we'd be looking at much higher prices in the commodities across the board. And because we didn't see that, we held that 1375 level Sunday night.
And so it's almost a given that we get the vote and gold goes higher.
I don't see, I can't see a scenario where it shouldn't go higher. You have a lot of shorts in the market. There should be safe haven demand that makes it bid. You have a little bit more volatility in the market, so the extra $25 or $50 is kind of just noise at that point. I believe yes.
Okay, great. And we see the gold-silver ratio coming in a bit here. Can you say something about that?
Well, that ratio, when we got down to the lows of 1184, that ratio was somewhere around 66 to 1, 66 gold to 1 silver. Now that spread is well below 60, like 58, 59, and in my opinion, that should be priced right around 55.
So we have some more room there.
We do have more room. Silver is outperforming gold both to the upside and to the downside. So that spread is now closer to 60 today, because silver is down $1 and gold is only down $20. But if we have that up move, I think that spread should come in.
Is silver the play if you're really looking for volatility and and we get some, truly hawkish information, not noise?
Absolutely. If you are a betting person and you want to make more money, obviously you can lose more money that way. Silver is the play, because take an instance like today. Gold is down $24 and silver is down $1. And if you equate a 10 lot in silver to a 10 lot in gold, a 10 lot in gold, if I was short from the highs and made $24, I would have made $24,000, and in silver I would have made $50. So there's more volatility in it. There's a lot more money to be made.
Mihir Dunge, as usual, total pleasure to have you.
Thank you very much.
You got it. This is Phil Pearlman, StockTwits, at the CME Group in New York. Adios.